What's up, everybody? Thanks for stopping by. Today is Friday, August 11th. Um, Today is the start of the first week of Finding Your Way Season 2. We have Easy um, joining us. We're going to go over his strategy. Um, the first week, we're going to jump into Mark trading psychology. I think this is one of the fundamental blocks to get you in the right mindset when you start trading. um, the first season of Finding Your Way, we only read one book, which was Trading in the Zone. Um, I've read other books, and it just came to mind that the top four books that have helped me get me in the right mindset or the right market psychology um, is four psychology books. Um, it's Trading in the Zone by Mark Douglas. That's the first book. The second book is The Disciplined Trader by Mark Douglas. And then the third book is The Hour Between a Dog and a Wolf. And then the last book is The 48 Laws of Power. Um, and these four books kind of help you with figuring out why you feel a certain way when you're in a trade, when you're about to take the trade, after the trade, before the trade, and they all kind of help you develop that emotionless trading style that you should have, or at least help you identify the signs of of why you're trading the way you are. Uh, so Mark Douglas starts off good, jumping into why you feel a certain way during um, different market conditions, whether you're in a bear and a bull, if you're in a long trade, short trade. And then he shows you how to put those emotions in check in the disciplined trader. Um, the 48 laws of power is more of psychological, like personally and trading wise. They have a couple of trading examples in there, but it helps you kind of dig in deeper into the psychology because we all grew up in different environments, in different settings, different kind of we all grew up differently, and you can draw that 48 laws of power will help you identify, if you were abused as a little kid and you're bringing those emotions into trading, it's going to help you identify that. Then the hour between a dog and a wolf, that goes even deeper, and I'm reading that one right now. That one goes into how how having too much testosterone levels can affect your trading, or having too much cortisol levels can affect your trading. Um, and that book helps you go in a little bit deeper into your hormone levels, and go what those hormone levels will cause. That's why it's always good to kind of be balanced and not have too much testosterone or too much estrogen or too much cortisol, because all those hormones cause different emotions. Um, so you can either read them or do the audio book of those four books. Those are four psychology books that I highly recommend. You can read them in any order, but if I had an order to choose, I would choose Trading in the Zone, The Disciplined Trader, then the 48 Laws of Power, and then The Hour Between a Dog and a Wolf. Um, so what I told Easy is, let's read Trading in the Zone. After each chapter, write down 1 to 3 things that you've learned from that chapter, and then how will you apply it to your trading strategy or to your trading style. Um, And then next week we're gonna kind of summarize and go over what kind of stuff he learned. We're all gonna learn something differently. I've read that book probably 4 or 5 times now, and I've learned something new or different every time. Um, so yeah, those are the 4 books I recommend. We're starting off with Trading in the Zone, and then we're gonna help Easy identify his strategy. We're gonna concentrate on one strategy or one setup for the first 2 weeks. The second or third week, he's gonna we're gonna implement a second strategy that complements his first strategy. In case he only sees his setup only twice a day, we're gonna add a second setup in case he wants to trade more than 2 times. He can have 2 setups in case one is not there. He can take another setup. But what we're trying to do is not confuse him or overwhelm him. So that's why we're gonna concentrate on one setup, on one strategy, and then we'll slowly add more stuff. Um, and then we're gonna help him define his rules for his strategy. Um, yeah, and then towards the end we'll jump into other stuff. But as we go, we're gonna have a couple of homework assignments, as we would call them, and yeah, let's see how well the second season goes. So without further ado, Easy, can you please jump into your strategy and help us kind of um, inform us of your strategy?
Okay, perfect. So hi everybody, my name is Easy Win. As you can see, I've been in the group and the chat. You guys see my questions. I'm not afraid to ask questions, but at the same time, I'm still struggling, even though I get some green days, but my red days, that's what I'm trying to limit right now. So started talking with Semper and Lasagna Cat, and then they decided to take me on, and then we're gonna dig in just to find out exactly where I'm struggling and then how I can get better at it. So without further ado, here's my strategy right here. On this one, this is the 30-minute chart. Doesn't matter the chart time frame right now. You can just say this is the 1 minute, because I do the same thing on the 1 minute that I do on the 30 minute or 15 or even 5 minutes. So right here, this is where we get the cross. These are my moving averages. I use the 10 and then I use the 50. That's it. These are the two main using average that I use to take a trade. Right now, just right here, this is where we have the 10 going over the 50. The cross is right here. So usually after that cross, I wait on the first dip just to retest that 50 level right here. So this is where you get the first dip. On that dip, this is where I make my entry. I know the chart is bullish because my 10 is over my 50 moving average. So from there on, this is where I take the long. All right, so that's the strategy I use to go long. 10 over 50, first dip to the 50, this is when I enter the trade. I am still struggling on where I should stop or where I should put my exit. This is where Lasagna Cat and at the same time Semper is gonna help me to put a profit level
Hey, Easy,
on
do
this.
you go in? Do you enter your trade as soon as it tags a 50? Like right here, you're entering in this
Unfortunately,
area?
yes, exactly.
I don't see nothing bad with that. Um, you just got to be a little cautious because sometimes it could be like a falling knife. If it's your level, and this is where stacking catalyst will
Mhm.
help you confirm that trend. Right now, as it naked as it is, just with volume and price action and your moving averages, I would recommend using the two-legged pullback entry. Um, this makes it a little bit safer. It will keep your red small. Remember, the whole goal of being a consistent trader is keeping your reds small and let your greens run. So in this example, just the way that you have this screenshot from here to here, um, I would enter, which is fine. You perfectly waited for it, right? I
Mhm.
would have entered one tick above the break above this body right here, right? Because right here, if you enter right here on the tag, and I used to
Okay.
be that trader where I used to put a fishing order. Once I like say these two candles are complete,
Mhm.
these two candles are complete. Okay, I'm gonna say I used to be where I used to put a fishing order out right there, and it would click the 50 and then go right, or sometimes it'd shy it away by a tick,
Yeah.
and then you're like,
Most
fuck.
of the time I see that it shies it.
And that's where the second legged pullback entry helped me out a lot, and it's helped me be way more consistent than what I used to be. And like I said, the entry would be one tick because I'm trading futures, right? It
Mhm.
would be one tick above that yellow line. So it would probably, or even the wick, depending. So it would be somewhere right there, right? And then my stop would be one tick below here. And that's going to vary. That's going to vary because on ES, that could be either 2 points or it can be 4 points. And when you're starting out with a small account, less than $1,000, it's way easier to make up 20, $10 than trying to make back 50 or $100, right? Because
Correct.
you're gonna be chasing a lot of stuff. That's gonna cause revenge trading. And you don't want to be stuck in revenge trading. Revenge trading, you make stupid decisions and you start just forcing trades. That's not what you want to do. You want to keep your tight stop, and not only does like a small red or a tight stop loss help you keep your red small, but it helps you be able to reset. And maybe, like, let's say you got stopped out and this candle right here went like right here, stopped you out, right? And then it
Yeah.
went up. Sorry for my drawing, but it stopped you out. Let's just say this wick went right there and then it went up. And then you could just be okay. Let me wait for the second pullback or for another pullback, and then and if it pulls back to the 10 SMA right here, and then it goes up, then that'll be your second entry. But it helps you reset like quick. Um, so
But
practice,
here's the question on this one.
yeah.
The reason why you would enter one tick above this candle, is it a second confirmation for you? Is it the reason why
No,
it has to be on the tick of that, on top of that candle?
just because. I mean, even then, even if it's just one tick, sometimes there's been times where it's like this, it wicks up, and then this one goes red, right? This one will go
Hmm.
red down
Yeah.
here. But the thing that helps me is okay, it hits a 50, right? That confirms the trend or the strength of the trend. And then right here, if you get up right here, you're catching the momentum. Over here, if you get in right here, you're catching knives.
Okay.
Over
Correct.
here, you're catching the momentum. And the odds are a little bit higher if you enter up here than if you enter down here, because you don't know if it ends like this, and then this next candle, this next red is going to be way down here, right?
Hmm.
But the odds of that happening if you enter up here are a little bit less because you're going with the green. Trust me,
Yeah.
I used to be where I used to enter as soon as I would fib this level out from there to here or to the fresh low, but this is just what I see right now. I would fib that out, and if it hit my 50 or 6 or 50 or 61%, I would have fishing orders out right there. But there was times where it would just keep flushing down. It would just keep going
Correct.
down.
Exact. Yeah.
And you're like, oh shoot.
Yeah. The way that I describe it to myself is that the red candle, the low on the pullback, the one that hits the level, um, so that hits the level, right? But the green candle and entering one tick above, that confirms strength above the level. And there's a good percentage chance that that strength will continue.
Okay.
Yeah, because like Semper was saying, just because something goes down to a level, it doesn't like give a high enough percentage probability that it will hold the level. The thing that he was describing with the fishing orders, that's happened to me so many times to the point where I thought, man, pullbacks are fucking bullshit, you know. And they're not
Okay.
bullshit. They just need to be properly confirmed. And the second leg pullback is one of the best things that I've discovered, along with that tight stop, because that tight stop is kind of like it's the closest thing in trading to a safety net. Like there's no safety net in trading, but your stop is limited. I had a red today where I let it go a little bit past my stop, and I was like, man, what the fuck am I doing? Because that stop is an essential part of the system. It's the best way to minimize a red, and that pullback entry one tick above, it's kind of the best way, with proper what you call it, catalysts and stuff. It's kind of the best way to like gauge strength uh from a level like, oh, it actually did find support because here's proof of strength, not 100% proof, but pretty high probability.
Yeah, and another thing that you got to take into consideration is how the candles develop. This is a beautiful candle, right? It's a hammer. It wicked
Mhm.
down to the 50 and it came up. But if it was like a full body red,
Yeah.
if this was full body red and it filled right there, you're not going to know if the next one's going to be red. And then you're going to get stopped out right here. But that candle, you have to learn candle development, right? Because this says, like right here, it looks like the buyers are taking profit, right? That causes selling. So it comes over here and then the buyers jump right back in and sucked it up. So there's strength there. And plus, with the catalyst, there was no volume beat right here.
Okay. Oh yeah, it's
Volume
true.
beat.
Yeah.
Remember, volume beats in the consolidation zone or the pullback. That's where you got like, yeah, there's this big red volume beat, but that's not considered, right? None of this is considered because that's the leg up right here. And then that was a consolidation zone right there for that consolidation zone. So right there, you see that big red, you're like, okay, Um, I'm not getting in because sellers might still be in control because of this big red. But then you start seeing these dojis on ES. Pay attention to gaps and dojis. Those are very, very important and significant levels. First gaps, then dojis, then floating candles, then high range candles. That's the precedence of what you should be looking for. If you see a gap on ES, expect for it to close within a day or two. It's been rare in ES. On SPY, they'll stay open for a while, but on ES, they will close. Let's say on Sunday, it opens up on the gap. Within an hour or two, they usually close. So be careful if it opens up in the gap and you're creating a higher lows and you think it's going to keep running, and it will sometimes. It'll run and then Monday it'll close that gap. There's been instances like that, but pay attention to those gap levels. They will close. And doji levels. Doji levels are excellent to identifying squeezes. When you see a doji level, like let's say we marked off this doji right here, right? And
Yeah.
then you see me in the chat. Hey, if we get over this level, it's going to squeeze. When it goes over a doji level on ES, look at that doji level, look at price action to go above it, and then start paying attention to the volume. When the volume goes really small, like it gets sucked in, kind of like geyser, or when you go to Hawaii and the water goes into the cave and it sucks in that water and
Yeah.
then it blows it out like some random hole in the rock. That's what it's doing.
Okay.
It's sucking it in, and then you're gonna see a squeeze. But like, put a horizontal line on ES on those levels. Like, I kind of use it as a, you know, I guess you could say a point of interest or a breaking point. It's either gonna squeeze up or it's gonna dump. But that's gonna be your over under. If you're a long player, start stacking catalyst. You have that line, right? Say price action's right below that line, and
Yeah.
you're like, fuck, I don't know if it's gonna go up or if it's gonna go down. Okay, then start reevaluating your stuff. Is it in a uptrend? Is it in a downtrend? Where are the moving averages? How does volume look? How does TTM look? How does RSI look? How does MACD look?
Perfect. Then I have a question on this one. Then what about the stop? Like, let's say that next candle that you say to get on the tick higher. What if that candle start coming down? Do I wait for it to hit my stop loss, or do I close it or anything? What do I do in this case?
That's gonna be up to you. You can either have a mental stop. You're gonna have a mental stop, or you're just gonna have a stop order.
I find it so far it's easier for me to put a stop order, because if it's mental,
If it's
I
mental, you'll
usually
get
find other reason to keep it going.
exactly. You're gonna start if it's in mental. I wouldn't do mental until you are happy with your strategy. Because if you're not happy with your strategy, you're gonna be, well, if it breaks that level, oh, it's gonna catch this level. I'm gonna add more right there. And then you're like, it goes down, it pops up right here, you add right here, right? And then the next leg down. And then you're like, fuck, why did I trade that?
Okay.
So that'll stop you. You'll be like, once it hits your stop, don't even get mad. It's a tight stop. It'll be like $10, $20 loss, and be like, okay, let me reset. Let me look for the next play.
Yeah.
But if you let it go way down here, you're down $50, $60, and you're like, fuck, I gotta stop out. Or you're gonna be like how I was in the beginning. Oh, it can make it right here. That's a level it might catch. Oh, it can make it right here. It's probably gonna bounce right here, and it bounces, and you're like, oh, good shit. And then boom, it just keeps draining, and you're gonna be stuck bag holding, and that's a bad habit. I
Yeah.
blew up all my accounts bag holding on a Friday,
Oof. Nasty.
and
Nasty.
I learned my lesson. I had
Well,
to burn my hand a few times, but I finally figured out, okay, having a tight stop loss is probably the best way until I'm comfortable with my stop.
With
And like, and one of the things that helps you adjust your stop later is, okay, let me have a cushion, right? So let's say this play played out right here, and you hit right there. Boom, target hit. Now you have a $50 cushion, right? And now you see this setup again, and say right here it's like 1.5 points, 2 points, right? And let's say the 50 is down here and it shied it. Now you're gonna be like, okay, I got in right here, but if the next leg comes down to the 50, I could put my stop one tick below the 50 because I have that cushion, right? And you're probably, instead of giving back $10, you're gonna give back $15, but you're gonna give the play a little bit more room to breathe and be able to catch the big runner.
yeah, and like for me, the thing about having an automatic stop that I love, I use them 90% of the time. Today on my red trade, I didn't, and like it ended up going like a point, like one like point below what I thought was reasonable. So, but I use a hard stop 90% of the time. And one of my favorite things about it is it's one whole dimension of the trade that you do not have to think about. like it's set in stone. Like, in other words, like you're managing your trade. Like, here are my targets. I'm watching indicators to see how things are going. But, you don't have to think about your stop because it's just there. You might think, okay, like things are going, maybe the trade isn't going to work out. I'm seeing the indicators flip. Maybe I'll get out before the stop. That's cool. But you don't have to manage the trade when it gets like to your stop level. Meaning like you don't have that stress. So if you have that hard stop in place, the worst that could happen is those
Okay.
2.5 points. And like you don't have to worry about, maybe I'll put it lower, maybe I'll do this, maybe I'll do that. And like you just don't have that decision. Because today when I got my red, I didn't use a hard stop and I had to deal with that decision. And it was the worst part of the trade, like even worse than the fact that the trade didn't work out. I didn't like the fact that I had to deal with the stress of managing that red in real time. It's just, that's one of my least favorite things about trading. I just don't like it.
Nobody likes the reds.
Um,
Okay.
Easy. Another thing that you can do is, like, let's say you're in the trade, right? And you're using the moving average. You're using the moving average play. Let's say you're in the trade right here and you're like, hold on one sec. Let's say you're in the trade right here and you're coming up, uh, and you start to see these candles get smaller. See how they get smaller? And then you're like,
Yeah.
fuck, I don't know what my target is. Right? But you already got 6 or 7 points, let's just call it.
Yeah.
Um, use the moving average. Right here, you would have got stopped out. Like I would say that there's this is not here. Um, but you're in the trade right here and you're coming up and you start to see these little small candles. You're like, well, where should I stop out? I would stop out at the break of the 10. Usually you could do a hard open close, like right here, you probably would have got stopped out right here on either one of these, the red candle or the green candle,
Okay.
if you don't have no
So
stop.
break
Uh,
of the 10.
yeah, and then you're gonna be like, well, if it breaks right there, it can always go down to the 50 and you could catch it again, like it did right here.
Mm-hmm.
So it broke the 10, you could have got stopped out right there. And remember, you're still green, right? Like I would
Yeah.
shoot. Remember, with the trend, you can shoot for 6 to 10 points, even more, right? If you're going to start out with multiple contracts, you can lock in, let's say your daily goal is $50 and you're in with 2 contracts. So each point is $10. And right here it's already $5. So you already hit your daily goal. So you lock in one contract there. Then you move your stop loss. You can put like on you use Ninja Trader to trade.
Yes.
So you could put a trail stop and then put it 2 ticks, attach it to the 10 SMA and maybe put it 2 ticks below. Like you can offset it 2 ticks below the 10 SMA. Right? So you'll have your stop right here and it's just gonna move
Yeah.
with it until it breaks the 10 and then you get stopped out. But guess what? You entered down here.
Mm-hmm.
So you just caught this whole play. Yeah, you might gonna give a little bit back. You hit your daily goal. You're good. You're green. Okay, you got that win. Let's wait for the next setup. Next setup, you're talking yourself through the trade. You always want to talk yourself. Narrate just like Brandon does. Like I usually do is, okay, I lock in right there. Okay, what I want to see, uh another higher low off the 10. If it breaks a 10, I won't get in until I see the candles developing around the 50. Remember, you always want to see how the candle develops and then look at volume. Um, and then
Okay. So I just wrote that down just so that I can work on it. So I have my stop below the previous entry candle, and then my profit target is the break of the 10 or 10 2 ticks below, just like you said.
that, or you can use the moving averages, but
Mm-hmm.
you don't use the the 200 or the 100 or the 666.
Actually, I do. I use all this.
Add those because those could be
Okay.
targets. But once it's above the 10, you can either use, I don't know if you use a fib. Are you familiar
And
with the fib? Have you used a fib?
I do not use the fibs, but yeah,
Let,
I'm familiar. I know how to use it, but I
let's
don't.
not use no fibs for now. We're just going to
Yeah.
concentrate on your 10, 50, whatever moving averages you use,
Mm-hmm.
you can use those. Or as soon as you start seeing like these little red, because it'll go up and then they'll start to get small, and then you can be like, okay, this looks like a good, or a whole number. You see, like over here is 39, 38, 40.
Mm-hmm. Where? I'm not seeing that. I don't know where you're seeing.
On the right, the price levels over here.
Okay. Oh, okay. Yeah.
So if price action is like at 38, 39, it's probably going to go to 40. If it's over here and if it's 44, it might go to 45. You can use that, but just have a fishing order out there at your target, but be ready with your finger on the trigger to close if you start to see small candles and start reversing like this. Or like I said,
Perfect.
you can use a break of the 10, a tick, you can either attach it to the 10, offset it by a tick or two, or whatever you think is comfortable. We're going to adjust it, remember? So if you start getting a lot of reds, we're going to figure
Yeah.
out, okay, that's not working. Let's figure out something else.
Okay. Can I just show you exactly how I used to do it though,
Yeah.
on the other hand?
Yeah.
So once I take my first entry, like I said, I usually trade with 2 contracts, right? So I hit my target. Whenever I hit the target, I only sell half. I never sell both of the contracts.
Yeah.
So I
That's
would
good.
sell half right here. And then on that tag of that 10 SMA, I will see how the candle develop, but if not, I'll just keep it because I know it's still supposed to go back up because right now everything is still pointing up. So that's why I'm still in the trade.
Yep.
Arriving here, you see this candle right here?
Yep.
This is where I will add again. So this is the first dip of that 50 SMA. So this is my favorite entry, right? I mean, my second favorite entry right here. Or this is my A plus setup. With everything still pointing up and then you have a red candle that touches the 50, I usually add exactly right here as well. And then I still write the move. But like I said, I only trade with 2 contracts, so I'll only add one more right here and then I'll keep on going.
Yeah. Be careful with that, especially because right here, see how the 10 SMA is pointing down?
Yes.
Be careful with the second tag. As usually the way it works is it'll either shy the 50 or hit the 50 and then keep going, right? And then on the second time, it might not
But
hold the 50.
this is the
It might
first,
not
but
hold
this
the
is the
50.
first this is the first tag to the 50.
Yeah. And that's what you want to see. The first, well, there's a tag right here, but that was after the cross. So after the
Yeah.
cross, right?
Mm-hmm.
Like this would not count as a 50 tag, even though
Yeah,
it did
correct. It
tag it.
doesn't count. Yeah.
So yeah, entry is fine, but this second one, see how it's heavier? See how the 10 is a little bit heavier?
Yeah, right here.
And
Sorry, I
then it
just
breaks, yeah. So right here, it's good, but what you want to pay attention to is the moving average flattening out. And entering right here might not tell you that. Just pay attention to it. I'm not telling you to
okay.
change your strategy, but
Mm-hmm.
if you start getting a lot of reds on this setup, then you might want to wait until price action breaks above the 10 again for a second leg, or another leg up.
Mm-hmm.
Don't change it. I'm just giving you a tip. Like, hey, if you start to see this, because look at the difference between here and then right here, it was like a nice slow roll. Right here, it was like, and then flat. Right over here, it was just,
Yeah.
and then look at the candles. This was red coming in, right? And then red out or green out. Over here is just red, green, red, red, and then once it creates a lower high off the 10 SMA like this, it's most likely gonna come down to the 50. Over here, it didn't create a lower high. It would have created a lower high with this candle, and this candle would have probably scared me a little bit. But pay attention to the SMA or to the moving average because it flaps. It'll flap down or it'll flap up or it'll flatten out. You want to see the moving average flatten out. You want to see it flat. Flat right here is the loop of the 10 right there. And you been good because you have volume beat right here. Here's the volume beat. And nothing else beat that. So you
What
can
were you comparing that volume to? Just
this volume bar right here.
oh, okay, this one. Yeah, I got it.
But then you see this big red bar. See how this big red bar, right? And look at this green bar. And then look at the volume.
Yeah.
It
Okay.
doesn't add up, right? Because if you see this big red bar, you'd figure this red bar would have beat this bar.
Yeah.
Hey, separate quick question. If you enter you personally, when you enter on a pullback to the 10, right? But if it goes below, like on these examples, and you want to see the higher low happen above the 10, do you ever get in the trade below the 10 SMA, anticipating the loop up, or do you always wait for a remount on the 10?
My A plus setup is for a higher low above the 10 SMA.
Yep.
But sometimes what I do is I'll get in like right here on this candle, right? Because that's a pullback low.
Yep.
Even though it's green, I'm not getting in because that created the pullback low. So I have a one tick stop loss below there, and then enter right here, and then maybe add one more right here above the 10.
Yeah.
Especially after you see this big green bar right here, you're like,
Yeah.
shit, I'm adding. At
So on
least
that
catch another little play up.
yeah. So on that second one, that's your pullback to the 10.
What do you mean?
Meaning
Oh,
like,
when I add right here?
yeah, I don't see your line, but yeah, the ad on the one that right, yeah, exactly, right there.
At the break of the 10. A break
Yeah.
above the 10.
And that's your 10 SMA pullback ideally.
No, ideally I want the higher low to be above the 10, like right here, and then go up.
Yeah, all right, cool. That's A.
Okay.
Yeah, that's A plus. This is like B plus. This is kind of iffy
Yeah.
because you don't know. Yeah, it's flat, but like I said, you have to pay attention to the moving average. And one of the biggest things that helps me is the RSI. Looking at the RSI will tell me like, okay, RSI is creating a lower high, or it's at the 50 RSI level and it's hitting its head.
Mm-hmm.
Those all kind of kind of let me know, am I getting in or not? Because if it's pulling back right here and it breaks a 10, but the RSI is right here and it's holding the 50, like
Right.
it broke the 50 RSI and it's coming back down to the 50, I'm paying attention to that too.
Yeah.
But if it's like wick down below, you'll see the RSI. The RSI, pay attention to it because the RSI will be like this, and then it'll go up, and then they slow it down. Like right here, they'll start to slow it down, and then they'll
Yeah.
get a tag, and then it'll go up.
Yeah, so there's that pullback low, which might tag the 50 right on the dot, but it's that second candle, the one after the pullback low, with the confirmed entry according to price action, that has the flap up from the
Yep.
50, essentially.
Yep.
Yeah.
Exactly. You want to pay attention to the SMA, and you see it flat, right? You're not going to get in here because you don't know if the 10 SMA is going to start pointing down, but this candle right here made it flap up.
Mm-hmm.
And you're like, oh, okay, it's pointing back up, so it might have strength. It's going to loop it.
Yeah. Yeah, for sure.
But if it would have been pointing down with the wick like this, and then you're like, maybe
Yeah.
I'm not getting in.
Yeah. Yeah, for sure. Um, I want to also ask about the other one because there's a third attempt at a 10 SMA loop later on in the chart and it fails. Do you
Over
see
here?
that? Uh,
Oh, hold on. Are you talking about right here?
yeah, exactly. And I see that volume is heavy to the downside, and I see that the at that point it looks like the 10 is flattened out. I don't know if it's pointing down yet or not.
But you see how it's kind of like steep over here?
Yeah,
Kind of like steep, and then it goes down.
sure. Yeah.
Computers don't really like to do this. They like this slow roll. You see it roll like that, kind of cresting, kind of like a wave,
Mm-hmm.
and then it breaks. It breaks. Like this doesn't just loop it. Like, see right here, this is kind of like a loop. It's a lot closer to the 10 SMA.
Yeah.
The
Right.
further the break is, the harder it is going to be to remount it.
Yeah, yeah, I feel you. And also like that, those three green retrace candles, those are really friendly looking retrace candles.
Yep, right here.
Small. Yeah, they're small, they're nice and
Yep.
square, you know.
And then you could have got in short right here. Boom. With the a stop right here.
Yeah, for
And
sure.
rode it to the 50. Like
Yep.
lock in 50 or 75% at the 50, right? Because you don't know if it's gonna bounce off, even though the moving average if the 10 is, look at the whole time it was pointing down, 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 down. But if it were like flatten out right here, you're like, oh shit, it's gonna bounce.
Yeah. Can I say something on this one? Because I do take short entries as well, but right now, even though it's pointing down, the chart is still bullish. So I usually don't enter a short unless I get that cross here. So it's only when I get this cross that I'll do then I will start shorting. So just like right here, right now we have the 10 or under the 50.
Yeah, and then you
So
got the
whenever it
confirmation
reaches
right here.
here,
Yep.
yeah, whenever it reaches here, then I'll short. This is what I would do. This is what happened the other day on Wednesday when I was like, I was short all day. I was bearish all day, but yet everything went up. So this is me. I usually short on that move right there because right now the chart says it's bearish. If it reaches here, I will short it.
Yeah. Yeah.
But I will not short if I have my 10 over the 50. I try not to because this is when I usually get trapped and I'm like, okay, is it really curving? I don't see the curve. Is it gonna come? So yeah, I usually don't do that.
Yeah, it's used to have it's useful to have a binary rule like that in terms of like overall price action or overall what do you call it, moving average placement.
Hmm.
It gives you a lot of
Now,
room to be like, I'm not going to take, you get to not even worry about trades while those moving averages aren't even crossed.
correct.
Yep.
Now, here's my other question on this one, Semper.
Yep.
So right now, this is the 30-minute chart that I'm showing you, right? So on the 30-minute, the moves are very clean. So you see when it happened. Now, if I'm trading on the 1 minute, the crosses, sometimes during a day, I get many cross. So that's why I would take so many trades. If I put it on a 5 minute, it's even less. And on a 5 minute, I might get 1 or 2 trades a day, top. So this is my dilemma right now. So by applying the strategy, if I'm supposed to take some trades, like how should I handle that? Right now, this is the 5 minute. And then on the 5 minute, let's see here, that day, technically, this is a short day. Like whenever it really touches the 10 SMA, I would short it here. But my A plus entry is if I get a push or a pop to the 50, this is where I go full size. Well, meaning 2 contracts. So
Yeah.
this is when I go full size.
What I usually like to do is I'll look at the 1 minute, right? Because I trade the 1 minute for my entries.
Yeah.
But I'll reference the 5 and the 30 minute. And I want them to line up, or and that'll also tell me how big of a scalp I can catch. So let's say, for instance, the 5 and the 30 minute are bullish, right? The RSI is below the 50 RSI. It's in the overcool on the 30 minute, but the 5 minutes already creating a higher low off the 30 RSI. So that's telling me, okay, is diverging on the 5 minute. Like today was a good example. Today the 5 minute had RSI divergence,
Yeah.
and the 30 minute looked a little bit bullish, and the 1 minute was a little bit iffy because it had just shot down. Right? Did it shoot
Yeah,
down
that's
right out the
today.
gate?
It shut down a bit, yeah.
It shot down, and then I was like, oh shit! The 5 minute is diverging, and then I seen the 1 minute pop above the 10 SMA, and then create a higher low off the 10. Then the 5 and the 30 minute kind of lined up. I said, okay, this is gonna squeeze to at least the 666 1 minute, which was like the 50 SMA on the 5 minute. So that would be my target. My target would be the 50 SMA on the 5 minute, but my entry would be on the 1 minute. And
Okay.
sometimes it'll be like the 5 minute is bullish and the 30 minute is bearish, or vice versa. If
Yeah,
the
that's
five
what happened
minute
the other day.
if the 5 minute is bullish and the 30 minute is bearish, that means in the next 30 minutes there's gonna be a bear move, but in the first 5 minutes there's gonna be a bull move, right?
Yeah.
So you enter on the 1 minute, you catch your target on the 5 minute, and then okay, then you call that a play. And then let's say it has another 2 legs up. It's already 20 minutes in to the 30-minute candle, which was bearish. And then you're like, okay, it's going to come up to the 5 minute resistance. That's where I expect a pullback on the 30 minute, which it lined up with the 10 SMA on the 30 minute. So the 50 SMA on the 5 minute lines up with the 10 SMA on the 30 minute. That looks like a good target to be on my 5 minute,
Yeah.
and a good entry or a good confirmation short on the 30 minute.
Perfect. Correct. That's perfect. That's exactly what I wanted to hear, because that's what I started realizing lately. I was like, sometimes you have the bearish on the 20-minute on a higher time frame, but the shorter time frames are bullish. Then I usually wait. I usually wait, let's say, whatever, to get that confirmation, but
Yeah.
it's not confirmation that I'm waiting for.
Yeah.
Me, I'm just waiting for that pop in order to short it. That's usually what I do.
Yep. And like I said, you could catch a pop, a bull move on the 5 minute, right? And it's going to give you like 10 points. But on the 30 minute, oh, the move's going to be like 20 points.
Yeah.
And when you catch that big 20 point or 30 point is when they line up together. Sometimes they all line up together. That's when you're
Yeah.
really in the groove, because the 1 minute is bullish, the 5 minute is bullish, the 30 minutes bullish. Then you're like, fuck it, it's an uptrend. It all the time frames line up. I'm gonna catch a 10 or 20 point play.
So far, it still hasn't happened to me. I've never catch a
You'll
move that
you'll you'll
long.
catch them. Don't even worry about hitting home runs. Right now, it's all about base hits, base hit, base hit,
Okay.
base hit. It's like the Oakland A's, right? When they had the money ball, all they worried about was getting on base, getting on base, getting on base, and you're just bringing them in, bringing them in. And then once in a while, they went on a 20-game win streak with like a bunch of home runs. That's because they train to be consistent. The home runs will come. The home runs will come. Don't worry about that. Let's just worry about creating that consistency.
With the base hits. Okay.
Just base hits, they add up, dude. Like, just think about it. If your monthly goal is going to be $600, right? That's 150 a week. That's about, what? If you're going to trade Sundays too, or you're only going to trade Monday through Friday?
Most of the time Monday through Friday, but on Sundays, Sunday, Saturday, whatever, I just look to see. Like, I don't even open my chart. I just look on my phone. I'm like, oh, where's ES? And if I know it's at a level, as a specific level, this is when maybe I'll check on the charts. But I don't really trade weekend.
So let's say your target, your monthly goal is 600 bucks. Your weekly goal is 150. Your daily goal is 30 bucks. Um, you're gonna be, and then you're gonna divide that by how many trades. So if it's 30 bucks, 4 trades, that's about, you know, $7, $7.50 a trade, which is you're easily able to hit that.
But okay, on the other hand, like I remember I told you I do I trade with Apex, yeah,
Yeah,
Apex
yeah.
futures, whatever.
Uh-huh.
So I mean I do have leverage to trade much more than that. So me, I was thinking, I don't know, like I mean the numbers that you're giving me, they're very small numbers. Like I usually catch much bigger move than what you're saying. Unless
No,
you're telling
that's
me I
fine.
should reduce.
That was just an example.
Oh,
You could
okay.
you could do, but like I said, you have to have a defined monthly goal
Correct.
and
Okay.
then
I'll
break it
define
down
monthly goal.
and then break it down. But make it realistic. Like me, I started out um my first goal was 600 bucks. 600 bucks. It was just like I said, 600 bucks uh, a month. That was my first goal.
Mhm.
Once I started hitting that consistently, like 3 months, I said, okay, I gotta raise my goal. You gotta push yourself out of that comfort zone. So the next goal was 1,200 bucks. First time I seen Brandon make 1,200 bucks in one day. I was like,
Yeah.
fuck, that looks realistic. Let me shoot for that. All right. So I extended my goal. And then the next 3 months, I slowly built up. First month with another 800 bucks. The second month I hit 1,200 bucks. Okay. The next month I hit another 1,200 bucks. All right, cool. Now I can prove to myself I'm consistent. My strategy works. My plays work. Now let me see what's up. Then I seen Brandon hit 6,000 bucks. I said, fuck it, I'm gonna make that my goal a month, right? And then I did that a month, and then I hit that for another 6 months straight. And then I was like, shit, well, maybe I'll make $6,000 a day. That's when I already had moved up to ES. And then
Wow.
at ES, I was like, okay, my goal is gonna be 2,000 bucks starting out, because 6,000 is a little bit much a day.
Mm,
So I'm gonna make it 2,000 bucks. And then I started hitting that consistently. Now I'm shooting
that's
for $6,000 a day.
that's nice. That's nice.
I
But
don't get it all the time, but I'll get
mhm,
close. Some
yeah.
days I'll hit 9 grand. Not often, but I'll hit it, right?
Yeah, that's
My biggest
awesome.
hit was 16 grand this year in one day.
Wow.
I was like, wow, this shit's
Holy moly.
possible, right? So after I start hitting my 6 grand a day, like consistently for like 2 months, I'm gonna bump that
Mm,
up to 10 grand a day. And then slowly I'm scaling up my time frames, because my goal is to ultimately just trade the daily chart.
wow.
Like get in
That's
the morning,
mhm.
look at what it looks like and close it, or swing trade it. If I could swing trade 10 ES contracts, shit, I'll be making 50, 60 grand a day, maybe. Hopefully.
Yeah, that would be
Um,
amazing. But someone just put something in the chat, in the futures chat. Len, yeah, he just put that making money trading. Rolling on to the next time frame, 1 to the 5. If you want to look it up.
yeah, I have that screenshot.
Yeah. So me, I wanted to shoot for 500 a day. That's what I wanted to shoot for.
Then let's let's make that after 3 months.
Okay.
Let's shoot for 250 a day
All right, no problem.
or something like it's achievable. Because
Mhm.
if you make it too high and you never hit it, it's gonna demotivate you. What you want to do is specific, measurable, achievable, relevant, and time frame bound goal. So that's why I say like $2,500 a day. Make that a year out from now. Know what
Okay.
I'm saying? Make that a year out from now. And then we're going to slowly build you up to that. We're going to go from, look, $20 a day. That's a hobby. That ain't shit. You can hit that with one trade.
Yeah.
$100 a day. Okay, can I hit that a day? Possibly. We can concentrate with 150 a day, $200 a day, whatever you think. But let's make it small for now. Small because you're only going to do 2 contracts. Once we start scaling you up to 8 contracts, 10 contracts, you're going to easily hit $1,000 a day. But we want to create that habit, the good habit, that consistency. That's what we're working on. We don't want you to be, okay, I hit $500 today, but tomorrow I lost $1,000. We don't want that. We want to be, okay, $500 today, $300 tomorrow, $400 the next day. On the 5th day, I hit another $500. Okay, I have confidence. The next week, I hit $500 3 days out of the week. Cool. I'm happy. Let's scale up. Okay, the 3rd week, we're playing with 3 contracts. I can hit $500 a day every single day. All right, cool. Let's scale up. That's going to create you consistency, and it's going to create that confidence of you hitting your daily goal. As trust me, you hit that daily goal, you're done. Call it a day. You're going to be sit trading this whole time, but like I told Lasagna Cat in the first season, hit your daily goal, and if you still want to day trade, don't overtrade. Do not overtrade. Whatever it is, do not overtrade. Just because it's sim, practice how you're going to play. Practice how you're going to play. You're not going to trade 10 times in real life, then don't trade 10 times in sim. Trade how you're going to play.
Perfect.
And then you're going to take that consistency and that confidence into the next day. And then you're just going to start be like, damn, this is getting easy. You're still going to have emotions. You're still going to have sometimes trouble, like, oh, it didn't work. You just have to come to the realization that your strategy is not going to work 100% of the time.
Got it. Perfect. All right.
But let's see how it goes. Read that book.
Yeah.
Trade in
I'm
the
already
zone.
on chapter 5 on the book, by the way.
Nice.
So yeah. Like I
So
said, I
keep
freaking
at
love
it.
that
If you
book.
finish that book, jump onto one of the other books that I recommended.
Yeah, I
It's
have it
really
in
going
the
to help
list.
with your trading psychology. Later on, like in the 8th or 10th week, we're going to get into market psychology. This is where we're kind of, remember how I said in the chat, hey, it's been beaten down the last couple of days. We need a pop. We need a bigger pop than normal. And then we're going to teach you, okay, market psychology going into power hour, market psychology going into after hours. And you'll start to see the patterns. Patterns are always on the chart. And we'll get into that deeper as we go.
Yeah.
But thanks for sharing.
Yeah, sure. No problem. Let's see.
Question easy about your chart. Do you use the chart without pre-market data?
I use both. I'm always looking at pre-market and without. On my right side, I have without pre-market.
Yeah.
On the left side, I have with pre-market.
Hmm.
I really use both. So that again, this is Connor's strategy. He always see what people that doesn't have pre-market whatever data sees, and then he also sees what we see. So you have them both. Sometimes I'll have, let's say, a level on the without pre-market, and then it's not gonna be showing on the other one. So I kind of base my entries, and not my entries, but mostly for my exit or my pullback. This is what I use them for. Yeah, like I said, it's Connor's Connor's strategy, this one that I use.
Yeah, so you like the pullback on the chart with the no pre-market data.
Yeah, exactly. I look at them and then yeah, with pre-market, it's always different. Sorry, I meant to put it like this. What the hell? Uh, yeah, there you go.
Right. So do you use the chart with the pre-market data for your 1 minute entries?
Yes, for my 1 minute entries, yes, I use without with the pre-market data.
Right on.
Yeah, exactly.
All right, cool.
I made my entry on this chart, but I'm
Yeah,
always looking at this just to see where we at on the other chart, just to see where we at.
definitely. All right, man. Sounds cool.
Cool. Yeah, Connor's getting more laser with that 50 SMA, 10 SMA. So
Mm-hmm.
as he improves, we're gonna improve.
All
'Cause
right.
remember, we're gonna add these little. Me and Lasagna Cat have been in the lead system since it first began, and we're still learning all the time. We're we're still improving like the fibs. We're still improving the moving averages, or whatever we're using. We're still improving on that, and he's adding more tools to it, like the GAN fan or whatever it's called.
The
Uh,
Fang.
and
The Fang indicator.
yeah, all kinds of, you know what I'm saying. So pay attention. He describes the same indicator a different way almost every time, but every time I'm picking up a little nugget every time, and it's helping me. It's definitely helped me be able to identify squeeze points. And like not even a year and a half ago, I mean, like, how the heck does he nail it? And he's like, and Brandon's to the point where he's like, oh, this candle's gonna squeeze, and he'll point it out, oh, it's squeeze, and sometimes he's talking and it's squeezing already.
Yeah.
I want to get to that point. Um, it's probably like my fifth, sixth year. So I would say I would give myself another 2 years until I'm to that point.
Perfect.
Um,
Um, just real quick, I have a question here, right? This is
yep.
the 1 minute chart. So on the left, you see this is the 1 minute, but on the right, this is the 5 minute.
Mm-hmm.
So the 1 minute, if I followed my strategy, this is where we had the cross right here. So this is where I would have made an entry.
Uh-huh.
And if I really follow the strategy to the T, this would have been where I should sell.
Yep.
Right here. But like I said, right, I usually keep the trade. I usually just sell half right here. And then this is when it comes back down. This is when I re-add again, and then I'd sell again on top. So I keep doing it as long as the trade is bullish. That's it.
You
I usually do that. As long as the trade is bullish, sell half, add again, sell half, add again, sell half, add again until the play is done.
be careful with that. Be very careful with that,
Mm-hmm.
because you always have to look left. Just because that standard dev is there, yeah, it's resistance, but you also have
Mm-hmm.
all this resistance right here too. Though there's not saying that it's gonna break or it's gonna go
Yeah.
above it, right?
Mm-hmm.
I would honestly, if I seen this chart, I would lock in half or 75% at that standard dev target, and
Yeah.
then move my stop loss and attach it to here and get out and then reassess.
Okay.
Because if you do it the way, I'm not knocking you,
Mm-hmm.
but if you do it that way, you might get more reds than greens,
Okay.
because you're 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 kind of playing with fire, because
I know. Like I said, I'm here to learn. Like I'm open for everything. Like if after all these years and I'm still not profitable, that's why I know I'm doing something wrong. And if I need to change that little habit, like you said, right? If I would have bought here and then just sold everything here, I'm 100% green.
yep.
Versus there, I am 50% green because I'm re-adding again. And then if it breaks, this is when I sell everything. But if not, I will just keep on doing it.
Yeah, especially coming up on the second resistance point, it's hard, especially because you didn't lock in.
Mm-hmm.
I'd rather you lock in right here and then lock in at the stop right here, right? And then if you're like shit, it looking like another good setup, then wait for it to develop.
Okay.
Lock it in right there. You're completely out of the trade. Because what if you add right here and then it just goes down? And then
Then
you're completely red. You're fucking
correct.
you went from green
Because
to red.
yes, exactly. That happened to me a lot. I either go from green to red, or if not, I'll have like a minuscule little green day or whatever
Yeah.
at the end when I'm done.
Yeah, and like this is prime setup, right? This is your A plus setup. This is probably like a B plus setup.
Yeah, this is my B. Here, this is my B plus. If I miss the move, then yeah, maybe I'll take an entry, but I'll just have one contract. I won't go full size.
And then you also gotta be okay. If I get in right here and it's only 2 points up here and I'm usually catching 5, it's not worth it.
Correct.
Let me see if it's gonna play out and go up. And you still have that one contract, right? Because you locked one in right there. You
Uh-huh.
still have this one because you didn't have a stop, right? And it looped to
Mm-hmm.
10. Then you see these candles develop. You're like, okay, let me put it one tick above here because I don't know if it's gonna make it above these little dojis right here. Let me put it like 2 ticks above or whatever. But yeah, we'll laser in we'll laser in your strategy and your setup and minimize
Perfect.
your reds.
All right.
We're gonna
Perfect.
do
That's
that.
good. All right. Thanks.
Uh, but like correcting these little trades that you're taking within the same trade is gonna help with that.
Okay. I yeah, I think as of this week, whatever I won't do them. Like whatever I get in with two contract, I'll get out and then just wait for the next trade to set up, or yeah, like you said.
If you just change that, that'll
Mm-hmm.
alone will probably make you more consistent
Okay.
because
Yeah, yeah.
you're kind of over trading within the same. Let your first play out. Let it finish, and then reset, and then evaluate. You don't want to
Perfect. All
like
right.
reset halfway in your trade, and you're like, oh shit, and then I went red.
Okay.
Let your place complete. Get the fuck out, and then let me see. Okay, I see another A plus setup, or I see a B
Mm-hmm.
plus setup.
All right. I think someone has a question in the chat. He said no EMAs.
Sorry, I'm only
Yeah,
working
sorry.
on one
I got
screen.
a lot of background noise, so I've just been chatting in the text. But yeah, I was wondering if you use any EMAs.
Okay, let me just get this screen bigger. I mean,
Semper,
yeah, I use the same EMAs that
Semper, do you
everybody
use
is
some
using.
EMAs?
What's that?
Semper, you incorporate EMAs into your strategy?
I use the 200 EMA and the 100 EMA. All the rest are SMAs.
Mm.
But the reason why I use the 200 SMA and the 50, well, I use the 50 EMA, 100 EMA, 200 EMA. And I use those because the EMA is faster than the SMA. And when you get the cross, it might signal that it still has strength or a trend reversal. Like if the 200 EMA crosses below the 200 SMA and it's already hit the 666, then I know that the 666 on top, and the 200 EMA crosses below the 200 SMA going down, then I know that the 666 is going to be heavy resistance and it might have a bigger pullback or it might trend reverse. Does that answer your question?
Yeah, I've just picked up on seeing a controlled sell when it's just riding, a 5 minute, the riding the EMA all the way. You just see it. It just, it's
Yeah.
just plain as day.
Yeah. And it's all relevant to what helps you pick up price action. You know what I'm saying? If you like the EMAs, then use the EMAs. If you like the MAs, and the price act, your eyes are going to adjust to the moving average that you like to use. And you want to find a moving average that helps you identify the total move or the whole price action play. Cool. Thanks for the question. Anybody else have any questions? Cool. Thanks for sharing your strategy, Easy. Concentrate on what we talked about, how to enter, how to get in and out for this whole next week coming up, and then jot down what you like, what you don't like. Start writing, start journaling. Like I said, you can use OneNote is a good. There's Keynote. There's a few. I like OneNote because I can go from my desktop to my laptop and be able to screenshot and be able to add everything, and everything syncs together. That's why I like OneNote, and it's free. But you can use
I'll choose OneNote. I think I'll use
you
OneNote in
can
order
use
to do it.
a journal, a real journal.
Mhm.
But these are the questions that, let me share my screen, and you guys see my screen?
Yeah.
So these are the questions you want to ask yourself. It might seem like a lot of questions. Some questions you might be like pretty easy to answer. But you want to answer these so it helps you correct your mistakes. Like I said, you can either just journal your red trades, because those are the ones you're going to learn from the most. So I recommend you at least journal all your red trades and share them with the group, or share them with us, at the minimum. If you want to journal every day, then journal your greens and your reds the same way. You might not, all these questions might not apply to your green trades, right? But try to at least answer most of these questions, and they'll help you open your eyes. I'll post it in the futures chat once we're done here. But the questions are, did I take this trade because I had a real edge or real probability, right? If you're getting into trades and you're not stacking catalyst, or if you're just using price action, if you're a price action trader, you want to have the numbers or the favor in your favor. You don't want it's like going to the casino, right? You go into the casino knowing that the casino has a favor or has the probabilities, right? They rig it up that way. You got to think the stock market the same way. The house has a higher probability of winning. But when you stack catalysts, it's just like counting cards at the casino. You're gonna know if there's a lot of tens in the boot, or if there's a lot of small cards in boot. It's the same thing here. You're gonna know, okay, is it in a long trend? Is it in a short trend? Is it in a chop? Is it stuck in a range? Meaning pretty much just chop sideways. Those are the things that you need to be able to identify. And then, if you're stacking catalyst, if you're using the elite system, you always want to stack catalyst.
Just so I know, are you gonna share that Word document, or do I
Yeah,
need
yeah,
to
I'll
type
share
it
it.
while you're
I'll
while you're
share it. And
talking?
then, did I take
Perfect,
the trade
thanks.
to recoup your losses is another question. Because that's going to help you be like, oh, I was revenge trading, or I was more emotional, you know? Um, Did you take that trade because you were blinded by your confidence? After, like, let's say you have 2 green trades and your setup is laser, you're like, fuck yeah, today's my day. And then the next one, you're like, oh, you get tunnel vision on a certain indicator, and you're like, I'm getting in because it tagged the 50. And then it goes against you. You're like, fuck. And then you take a screenshot and you're like, oh shoot, I didn't pay attention to TTM. I didn't pay attention to these indicators, or I didn't pay attention to this support or this demand zone or this support and resistance level. Because you'll still have those moments. Even though you're getting better, you'll still have those moments where you'll revert back to your old habits and you're like, fuck, why did I take that trade? Right? And then how do you feel when you took the trade? Were you happy? Because even Lasagna Cat can attest to it, like where he takes a trade and he's cool, calm, and collected. And he lets the play out. He got his stop in, got his target locked in, lets it play out. And then there's a times where you get in the trade and you're like, fuck. I hope it goes in my way. I hope it goes in my way. Oh, it's gonna go back up. And you see those emotions, right? The difference. You're like cool, calm, collected. You're cool, hit your target, you onto your next trade. But if you're all nervous and emotional, scared, and you're like, fuck, the next trade's gonna be even more iffy because your emotions are not in check. And then, if the trade goes to if it's going near your stop, when this trade started going down to my stop loss, did I actually want to sell and hit my stop, or did I want to not hit my stop? You want to keep this in check because this is going to help. This question right here is going to help you correct your bag holding. You don't want to bag hold. Like I said earlier, you don't want, I blew up 3 accounts bag holding. You don't want to bag hold unless you're swing trading, of course, right? Or if you're bag holding, you're a long-term dividend investor, like I am too. Like I'm doubling up, tripling up my long-term investments right now. But that's not called bag holding. That's just called investing because you're in it for the long haul. You're not a day trader um, in that sense. And then did I add more size? Remember you were saying, did I add more size when it hit that 50 SMA again?
Yeah.
This is a question that'll answer that. Was that a good idea? Was it a bad idea? And then did you add more size because you wanted more money? Remember, when you're beginning and you're correcting, it's not about the money.
Yeah.
Like I said, you don't want to hit home runs. You want to hit base hits. And then in a green trade, what did you do good? Or even in a red trade, you could do something good, right? You waited, you were patient. It didn't play out. What didn't you do good? Did you get tunnel vision? Did you get overconfident? You didn't wait for the setup to fully complete. You didn't wait for the first legged pullback to enter or the confirmation to enter, or you got in early. And then what could you have done better? Could you have waited a little bit more? Could you have waited for another indicator to pop off, or waited a little bit to stack another catalyst? And then what did you learn from that trade? Did you learn not to get in when it taps the 50 SMA? Did you learn FOS, a fake cross? Did you learn the loop? That sometimes new traders, they see it break the 10 SMA and then they get in and then they get stopped out and then it loops to 10 and it keeps going. You're gonna learn all these little things. These are things that you want to identify. And then the last and my favorite question is, how will you use it in the next trade setup? because this is going to help you train your brain to only do the good setups,
Okay.
not to get impatient and just take any setup. Just remember, one of the major things that helps you kind of keep yourself in check is calling out the play, narrating the play, just like Brandon does, you know, when he's like, okay, it's going to come back down to this level. It should hold this level. Okay, volume's getting sucked up. It's going to squeeze this level. Or you can be like, okay, it looks like it's basing. The moving averages look like they're flattening out. I want to see a higher low off the 10 SMA. If I see a higher low, that's a good leg to get in. It's a lower probability, but I can get in, you know. Okay, no. And now I made a higher low off the 10 SMA. Where can it go to? It can go up. My target could be the 50 SMA. Okay, what do I want to see at the 50 SMA? Do I want to see it tag the 50? Do I want to see it bust through the 50? And this is all going to help you be like, okay, I can use the 50 as a target, but if it busts through, I know that it can go up to the 100 EMA. And the moving averages help you tell the story. If you're not a moving average trader, do whatever you do the price action thing, do the supply and demand zone thing. But I don't have anything against just a price action trader. I don't have anything about just a supply and demand trader, right? Because I learned from those. I learned what I actually do is I take all three. I take indicator trading, price action trading, and supply and demand zone trading, and I smash it all into one, because not every single time is one of them going to work 100% of the time, especially when price action is like at all-time highs and there's no moving averages up there. There's nothing, right? There's nothing to tell you it's going to freaking top out. So that's when you put your price action hat in, is okay, where's a good resistance zone? Where's a good supply zone or demand zone?
Yeah.
But
I don't even know. It was 100 a day.
but that's what it's going to tell you. It's going to help you figure out what to do next time. And yeah, just stick to that strategy for this whole next week or two. Okay. We're going to add more stuff to you slowly, but we want to laser in your primary strategy. That's what we want to laser in. Once we laser that in, we're going to add a little bit more and then show you how to properly stack Elite's catalyst.
Perfect.
So yeah, I'll post this in the futures chat, and then you guys can make up your own questions. Remember, these are just journaling questions. These are not your rules, because I have rules that you'll walk yourself through, and they're going to be questions. They're not going to be rules as per se. They're going to be pretty questions to talk yourself through the trade. Cool.
All right. Thanks.
Lasagna Cat, you still have time to recap? I got about another 30 minutes if you're available.
Yeah, I've got some time to do at least a few. So yeah, let's do it.
Yeah.
Go for it.
Me too. I'd love to see that recap.
Right on. Cool. So let me write my little timestamp. Share my screen. This top one. All right, cool. All right, yeah. So it's Lasagna Cat here. I'm gonna share some recaps from the week. Thanks a lot, Easy. It was great hearing your first mapping out your strategy and your starting point, and your initial day of work here on here. It's awesome. I'm excited for the next few months with you. It's gonna be great. And so I got my trades from this week. I actually want to start with the trades I did today. I usually start like at the beginning of the week, but I don't know what I have time for. I want to make sure I cover these. It's one red trade and one green trade. The red trade is really important because, you know, over the last few months, I've mapped out my own strategy, and like there's still a couple of bugs in it that I'm working out, you know, to make it even more consistent. And I've run into this problem before, a couple of times when my setup didn't work out. Looking back on it, I can definitely identify some reasons why it didn't work out. But December, I'm gonna maybe like just talk about why I got in. And I usually talk about why it didn't work, but if you're available for it, I'd kind of like for you to give your take on it first, just to see like before I kind of explain what I saw why it didn't work out. But first, I'll say why I did take it. All right, I took it because what I like to see in my setup is I like to see two higher lows. Ideally, sometimes I do one higher low, but you know, I like seeing two. Also, I like to draw a fib from a moving average. You know, top of the move down to the bottom. You know, and to look for some support from my ad zone. I like to see RSI. If it's in the top channel, I like to see it come down to the 50 and come back up. And I like to see that opinion being confirmed by MACD spreading out in the right direction or going for a fresh cross. And I also like to see in the major moving averages stacked this way, 50, 100, 200, and the 666, which was up above, way up above. I also like to see the 50 EMA cross over the 50 SMA, which happened here. And a few other little things that I'll go over. But first, I'll walk you through the psychology of it. Also, I like to take the leg entries, which is one of the things that I did wrong on at least my first initial entry into this trade. The leg entry is like, okay, this would have been a good example, even though it didn't play out. The leg entry is when you take the pullback low and you get in on the next candle or the next candle that makes a tick above that close or that wick. All right, but I'll walk you through this.
Hey, Lasagna Cat, real quick, can you explain these moving averages?
Oh, I just did. Were you listening?
Yeah, I kind of stepped away for a little bit.
Oh yeah,
This
yeah,
one
no,
and then this one.
yeah. I totally explained that. It's the 50, 100, 200, 666 cross. I mean stack, and that I got the 50-50 cross, and that all looked good, but I didn't say anything else.
Just looking at it, the first leg, it was not that clean. It was a little bit choppy. Is this the 10 SMA right here, the white one that's flat? Oh, sorry. Yeah, that one.
The 10 SMA is this. It's blue. Yeah.
What's this one right here?
That's the middle Bollinger Bands.
Oh, okay. Yeah, the only thing that caused concern here is it looks like it's a downtrend, and the 50 is not flat at all.
Right.
Not even when you entered.
Yeah.
That was where's the 50 EMA? Oh, it's right there.
The 50 EMA was flat. So I was kind of looking at that one. I was looking at the EMA, which did look flat, but this was, and the way I saw it was like, I was like, okay, the 50 SMA is pointing down. And I said to myself, well, one of them has to point in the other direction in order for the cross to happen. But it seems to me that maybe that was not the way I should have been thinking about it.
Yeah, you want to see all the SMAs flat, like the next level up. Like so yeah, you had the 10 right here, right? Flat.
Yep.
You had the 10 SMA flat, but when it's flat, you want to see the pullback come down to the 10 SMA. And when it's okay that is this a 10 right here? I'm sorry. Oh, that's a middle Bollinger Band, right?
This is the 10. This is the middle Bollinger Band.
Yeah. So it was flat right here, and then it's pointing up. But when it's flat, see how this is flat? Remember, you want to see the next moving average up flat, or at least start to get flat.
Yeah, yeah,
And this move right here should have caused the moving average to be flat, or at least start to kind of curl,
right.
start to be like this. And that move didn't cause that. And that's something that's okay. It can still go down because the 10 SMA can come up to just like it did right here.
Yeah.
Come up to the 10, shy the 50, and then continue going down.
Oh, could you
That's
repeat
what
that part? Could you repeat that part? I was making a note.
um when you see this, right, and the next moving average that's higher is not flat and it's still pulling down,
Mm-hmm.
that means that most likely is going to be a fake or a shy cross.
Yeah.
And it did that here exactly.
All right. So that illuminates a lot, because like the fact that I was like, I took the 50 EMA as encouragement because it was going flat, but I don't base my trades on the 50. So the fact that it was pointing flat just should have been like, okay, that's nice. The 50 EMA is pointing flat. Let's see what's going to happen next. Let's see if let's see if the 50 SMA follows suit, which it had no indication of happening. That's kind of a good way to look at it, right?
Yeah, because see how right here you would have wanted to see this kind of curling like this with this 50 EMA crossing, and then the 50 EMA would cross up,
Yeah.
and then the 50 SMA would stay flat for a little bit, and then it'll start to go up.
Yes.
See the difference?
Mm-hmm.
It kind of swoops. The best way to explain it is kind of like when a wave is forming, it kind of sucks down all the water, right? And then the wave starts to crest, and then it goes. So
Yeah.
it's like you want to see it like this, and then the next one kind of like that, right? And then the next one like that. That's what you want to see. And then this is gonna cross that, and then this is gonna cross there, and then this is gonna be right there. Now and then it's going up.
Mm-hmm. So you want to see some of that action happening with the 50 SMA before you
Yes.
start fucking with it. Yeah.
Yes.
All right.
See that? See how it's pointed down? That's heavy.
Yeah.
And it's real steep.
You,
When
you know
it's
you know what that makes me think of? That makes me feel like it's still getting energy from the death cross.
Yep.
Because it's spreading still. I didn't
Yep.
see it at the time. It's spreading
Yep.
still. Yeah.
Yeah, that was another thing that I was gonna point out right here. It's getting farther apart.
Yeah.
When
Yeah.
it should have been like, okay, let me close in. And if you would have gotten this flat, that flat, that flat SMA,
Mm-hmm.
right? Then that would have caused this one to be kind of a little flatter over here instead of pointing down. And then over here, both the EMA and the SMA would have crossed right here.
Yeah, that makes a lot of sense. Okay, and when I was formulating my setup, that was actually not a detail that I had much considered, because I was more focused on the fact that the 100 over the 50 is part of my preferred moving average stack. But it hadn't really clicked in my mind that if they're still spreading, that's still momentum from the death cross.
Yep. Yep.
And for those who don't know that terminology, the death cross is the 50 SMA under the 100 EMA. So like you see back here, they're close together, and as they spread, it signals more down. Even though there was a nice pop here, pops happen in a downtrend, obviously. So it's like it's spreading and there's more downside.
Yep.
Yeah.
See, like this play, here's that pullback to the 10 SMA.
Yeah.
You should have caught it to the 50 SMA
Yeah. Yeah.
up here, and then reset to see if there's enough strength.
Mm-hmm.
But would that have been worth it? That I'm not 100% sure. It looks like it was like 4 or 5 points. So it could have been worth it.
Well, you know what? It's like it would have been worth it points wise, but it probably wouldn't have been worth it habit wise, because it would be longing into
the resistance
yeah,
of the
exactly.
50 RSI.
Yeah, and like it's funny, like I've seen this smash through happen a bunch, but it fails more than obviously it fails more
Mhm.
often because that's hitting your head on the 50.
Yeah, like I told Easy, like sometimes when it smashes through, if it's coming back down fast, it's probably gonna come back down
Right. Yeah.
below it. But if it smashes through and then it does this, like it starts slowing down, you'll see it. Trust me, when you kind of key in on the RSI, you'll see the RSI kind of just like dead stopping. You're like, what the fuck? Why is the RSI moving so slow? And then you're like, oh, okay, it's gonna hold the 50 and then it's gonna go up.
And that's the thing. It's like that's why I kind of had like some renewed faith that this would work out because it was being gradual on the 50. But I would like to get it straight in my mind, and I do believe I will now, that in order for me to take a good signal from this, I have to first take a good signal from this.
Yep, from top to bottom. Read
Yeah.
what the charts give you and then what the indicators are giving you.
Yeah, hell yeah. Because this has happened to me a couple times over the last couple weeks, and I'm like, what the fucking fuck? And like I know that there's a way to solve these things, but you know, it's these conversations that illuminates that, and this
Mhm.
is why recapping your reds is the way to go. Because it's like you gotta find the combination numbers, like you know, like on those combination locks that have like the 4
Yep.
or 5 sliders. You might have 4 sliders, which is awesome, but nothing's really gonna happen for you until you have all 5.
Yep.
And so you gotta keep at that.
Yeah.
Uh, and that's me talking to myself. I got to keep at it so that this system really takes off for me.
Yeah, exactly. And just because it was in a downtrend, like I said, when it's in a downtrend and you're counter trend trading, keep your scalps to 4 to 5.6 maybe max.
Yeah,
And
but
be wary, be like, okay, I'm gonna lock in maybe 75% at 4 points and then let one ride or 2 ride.
yeah. Well, what's confusing to me about that is that like the counter trend trade is also, depending on the trade, it can be the one that completely reverses everything for like the whole day. And then you've
Mhm.
got then you've got a home run or like a fucking grand slam, you know what I mean? And so it's like, in my trading goals, I would like to be able to differentiate the counter trend trade for like, 6 points is fucking awesome,
Yeah.
obviously. But it would be also nice to identify, all right, when's it going to turn into that really large move, etc. And maybe it has to be catalyst driven, maybe it has to be weekly level driven, but those are the details I need to really keep an eye on.
Yeah.
And,
If it's gonna be a bigger trend reversal, most of the time the moving averages are tighter together.
including the 666, or is it six as well?
They might be near the 666.
Yeah. All right. And that's for the big one, like a big reversal,
Yeah.
typically. All right.
And
Cool.
usually what I use for like a big trend reversal is a 200 EMA crossing the 200 SMA.
Yeah. Yeah, for sure. At the beginning of the reversal or as it progresses? Either.
Let's say I see price action basing, like I would have seen it basing like this. Right. And then the 200, if it's basing like that, and the 200, where's your 200s here?
200 is EMA and SMA.
Okay, so right here it's basing. I would have seen the 200 EMA kind of like this. Or hold on. The 200 EMA flattening out. And then the 200 SMA still kind of going down, but right, it's gonna cross. You'll see that cross, and then you're like, oh shit. And then it'll come up to like the 100 EMA, come back down to the 50, and then go.
Mm-hmm. Mm-hmm. Right.
Um,
So you want to look for that 200 moving average look, hit its price action, hit its head on the 100, come down for confirmation on the 50, and then see if we can sail back up.
Yep. Or sometimes it happens where it's stair stepping, where it's going really slow, right? It's stair stepping, so it goes up to the 10 SMA, and then the 50 SMA, and then the 100 SMA, and then we finally get the 200 cross over here.
Yeah.
then you know it's gonna probably go to the 666.
Yeah, with that.
And that could be a 10-point move, 15 points. Because remember the 666 and the 200 usually spread out between on the 1 minute between 10 to at the most 20 points. If you're that's like way overextended.
Yeah.
If the 666 and the 200 SMA are 20 points ahead or apart, you should be looking for at least a 5-point bounce,
Yeah.
possibly even a bigger bounce.
Yeah. Right
And
on.
I don't have examples of it, but I'll try to keep I'll try to find some examples so I can actually show you what I mean. And you're catching the big trend reversal pop.
For sure. Yeah. All right, awesome. Actually, Easy Win has a related question. He goes, can you elaborate more on the trend reversal? And he goes 200 crossing 100. So I don't think we mentioned 200 crossing 100, but we were talking about some other stuff. Easy, did Semper answer what you were looking for already, or do you want slightly more detail on something?
No, it's perfect. He did answer, but he said when he'll have more example, because that's something that I've been paying attention as well to, the trend reversal, but it's fine. It's okay. Thank you.
All right, right on. Cool. Yeah, that cleared up a lot for me as well.
The other thing, Lasagna Cat, is a golden cross, which is the same as a death cross, but to the long side, right?
Yeah.
The golden cross is a 50 SMA crossing above the 100 EMA. That can signify that's going to be a continued move,
Right.
right? Because remember last week I said if you see the 1050 moving average, right?
Yep.
Or if you see first, it'll kind of go in sequence. It'll go 50-50 will cross, and then after the 50-50 cross, you want to see a higher low off the 10 SMA. And if it creates a higher low off the 10 SMA and it pops, then you want to see the 10 SMA cross above the 50 SMA. That's signaling that it's gaining strength for a possible trend reversal, right? So then it goes above the 50 SMA, comes back down, hits the 50 SMA for confirmation, and then the 50 SMA is pointed up.
Yeah.
Right? It's pointed up like right here. It's pointed up right here. And then you got the 100 EMA right there, right? And then the price action is above the 50 SMA. So now you're telling yourself, okay, I want to see a higher low off the 50 SMA. So you get a higher low off the 50 SMA. It's right here. And it's right here, price action, right? Halfway between the 50 SMA and the 50 EM and the 100 EMA. And then you're telling yourself, okay, I want to see this cross the 50, 100, right? And then price action goes like this, and then you get the cross. You know, right, that with the golden cross right here, the 50 SMA crossing above the 100 EMA right here, that it's gonna go above the 100, right?
Yeah.
And then over here you get the 200 crossing.
Yeah.
That's going to signify that it still has strength in it to come back down shy of the 200, confirm at the 100. Sometimes it doesn't. Sometimes it'll shy it. And then you get the 200 cross. And then you're like, shit, this is going to go to the 666. And then it goes to the 200, comes back down shy of the 666. And then it continues going up because you got all three crosses. You got the 1050. Well, first you got the 50-50, right? Then you got the 1050 right here. And then you got the 100 or the 10 or the 50 SMA and the 50 EMA. And then how do you know it's going to go up to the next level? You get the next cross.
The 50 over 100.
The 200s.
Okay, so but on the 50 over 100, right? Where do you hope to get the pullback confirmation? Does it sort of sandwich between the 50 and the 100?
No, because it'll already be above the 100.
Right. Okay, I see. So you're enjoying a move up above the 100, and then you get the cross, and you're not like, it's not like the cross is saying to you, it's definitely going to pull back to a certain area, saying that that continuation is probable.
Yes, that's what it's saying, that the next leg up is more probable because you got the 50 SMA crossing the 100 EMA right here, but
Mhm.
price action is below the 100, right?
Yep.
So you want it to either come back down, tag the 50, either the 50 EMA or SMA, it doesn't matter.
Yeah.
You want to see a higher low off of one of them, preferably the 50 SMA, because that one is going to be probably on the bottom of the 50 EMA.
Yeah.
So if it holds a 50 SMA, right, it gets a higher low off the 50 SMA, it's going to have continuation up. But if it creates a higher low off the 50 EMA, you better make damn sure that it holds that 50 EMA, because if
Mhm.
it breaks below that 50, so it breaks below the 50 SMA and it catches a 50 EMA, you better hope that it goes back up.
Yeah.
If it breaks the 50, if it breaks both 50s and your entry is above the 10 SMA, be
Mhm.
very, very careful, because if it breaks both 50s, it might come all the way back down to the 10 SMA.
Yeah.
And you're just taking it in sequence. You're
Yeah.
taking, if it breaks the 1 minute 50 SMA, it can possibly catch it at the 50 EMA. If
Mhm.
it breaks that, the next level is a 10 SMA.
But
And say,
at that point, you're. Oh, sorry. Go ahead.
at the same point, if you see it stair stepping on the way up,
Yeah.
you know, if it breaks a 50 SMA or if it breaks a 50 EMA, you want to see it above the 50 SMA. If
Yeah.
it breaks a 50 SMA, you want to stair step, you know, want it to smash through the 50 SMA, come back down, hit the 50 SMA, create a higher low, confirm, and then you want to go back up above the 100 EMA.
Yeah. And at this point, the 50 EMA will be above the 50 SMA, so it would lose the EMA first, and then the SMA second, and then head down to the 10, and potentially break the 10, right? If it if
Yep.
it if it
Yep.
if the trade doesn't work, right?
Yep.
Or
If it breaks that 50 SMA,
mhm.
you probably want to, if your entry is above the 10 SMA, you might want to close out with like 1 point green and reset,
Yeah, sure. Yeah, definitely. That's
because the
yeah,
next catch point is a 10 SMA, which is below your entry, which would make you red in the trade,
yeah,
right?
yeah,
You just be cautious, because you wanna see it hold those levels.
yeah, yeah, for sure. This discussion here has answered a lot of questions I have about when is a downtrend actually ready, or rather, when is a nice long trade actually ready in a downtrend?
Yeah. And then like, let's say none of this is here. I've seen this move happen so many times where it bases
Mm-hmm.
and then it pops up and you're like, fuck, I missed it. And then it continues going down, right?
Right.
And then you're like, fuck, I'm done for the day. I can't catch it. Well,
Yeah.
it'll base again. It'll hit that base level, especially when there's a doji down here,
Mm-hmm.
like this doji right here.
Yeah, it's a really good one right there. Yeah.
I would have marked that doji off
Yeah.
and I would have said, okay, price action is right here. I want it to hold this level. If it breaks, it's going short, right? That would have been a squeeze point right there. That doji
If it
right there
doesn't.
created that
Yeah.
squeeze point.
Yeah. It was
Um,
it's precipitated by this one here too, because
yeah,
like right here, this leg entry is just like well, here's the low for one thing, and then there's this right here.
yep.
So it snaps through.
But
Awesome.
look, it
And it
created a
snaps
lower
down.
high off the
Yeah.
10 SMA.
Yeah. Oh,
When you
true.
see that shit, be very cautious, especially if you're long. You're like, oh shit, I'm long right here. Say you entered right here. Say you entered right here because it's technically a higher low, right?
Mm-hmm.
And you entered, it's a pullback. I wouldn't have entered there because you got a lower high, lower high, lower high,
Yeah.
and then a fourth lower high,
Yeah.
breaks. But you see it creating lower highs on the 10. And this happens on the 50 SMA as well.
Yeah.
It creates a
Yeah.
lower high off the 10,
Mm-hmm.
and then probably for sure it's gonna break. But back to the play that I was saying is, you see this base,
Mm-hmm.
right? You see a basing, it hits right here. Ah. Let's say price action hits right here and it hits the same level. Don't get in until it creates another higher low off the 10 SMA.
Mm-hmm.
Don't even I wouldn't even get in on the first pullback unless it was already in an uptrend right here.
Yeah.
But right here it's basing. If it creates a higher low off the 10, now you tell yourself, I want to see a higher low off the 50. So then it comes up, creates a higher low off the 50, and then it holds the 50 RSI. That's a primo entry to the 100
Uh-huh.
EMA or to the 200.
All right. Very cool.
But like I said, if it breaks this, right, because it created a higher low right here, and then it breaks it, then you're like, oh shit, fuck that. Let me wait to see what happens at this doji right here. I want to see it hold that level, bounce up, create a higher low off the 10 SMA for a possible trend reversal.
Mm-hmm.
But I'm not getting in there. I'm getting in when it creates another higher low off the 50 SMA.
Yeah.
Because by then the 10 SMA might be crossing the 50 over here.
Yeah.
And then you can even wait till you get the 50 10 cross. And there might be another pullback right here. And then if you get the 1050 cross, you know that the probability is high of price action going up to hit the 100.
Yep.
Hopefully that helps.
Oh, that helps a lot. Oh man. Forget it. That mapped out so many scenarios and different things to look at with moving averages, and also I don't know, a couple other things like the basing stuff. The higher lows off the basing is something that like is definitely something I've seen before, but I haven't and even played before, but I haven't played them as much in terms of moving averages that way.
Yeah.
Yeah, awesome.
Thanks for sharing your red trade. I know I didn't play out, but
It's fun.
we'll correct it.
I mean, this is so beneficial. I can't even say, because it's like it's a solid setup, and I know it is. And when it doesn't work, I know that there's reasons.
Yeah.
And
And you'll start getting accustomed to these setups, because what you're gonna do, because you're narrating your play, right? How you used to narrate or how you still narrate.
yeah,
But now you're adding a little bit more complexity to your narrating, right? Because you're just like Brandon. When he leaves for the day, he gives us 3 scenarios.
right,
That's where you're gonna work up to. So
yeah,
you're gonna be like, okay, if I see this, it could possibly do this. If I see this, it's probably gonna do that.
right,
And if I see this, this might happen. And you're gonna see those 3 scenarios, and then you're gonna be like, oh shit, scenario 1's happening. Let me see if it confirms scenario 1. Okay, it confirms scenario 1. I'm getting in.
yes,
If scenario 2 happens, oh, I see this. Or, you know what I'm saying? You're gonna start to see either. I would start with 2 scenarios and then maybe add a third later. But now that you got your calling out plays pretty consistent,
mm-hmm.
now you're gonna be like, okay, if I see this, this might happen. If that doesn't happen and I see this, that might happen.
Yeah, for sure. Yeah, and so like I'm still working on having the 3 scenarios, and actually lately these days, daily TA on the daily chart has been a little more difficult for me to read. Maybe it's because it's been on its way down so hard, although I have seen high range retraces for, like, you know what I'm saying, like when there's an engulfing candle or like a high range candle, and like you anticipate like on the following day or a couple following days the retrace to the 50 to the HCR of that candle. I've seen that play out, but there's been like daily TA has been a little bit off for me lately, which is all good. I'm still ironing out my daily TA for sure. You know,
You're
daily
good.
chart.
You got to remember to look at all the charts the exact same way. The same way
Yeah.
you read the 1 minute is the same way you read the weekly, daily, 35, and one.
And that's what I'm practicing. I still don't have what I mean is I still don't have my mind wrapped around that yet. They still look different to me.
You're
You know?
good.
Yeah,
You'll get there. Just take it one step at a time, and we'll get you there.
for sure. Um, so I have another trade from today. The first one I showed you was a pre-market actually. And that was it right here, this price action here. So, you know, I took that red and it was all right. You know, I've learned to be a lot more graceful about my reds because my probability for being green is, you know, so much higher these days. So it's easy to take it in stride, and I'm so much better at protecting myself than I was in the past. But moving right along to this one, so we got this nice big bounce. This was the 10 SMA weekly on SPY, right? And I got up here and put in a nice doji. So I was like, all right, that looks like a fib to me. So I drew the fib here down to there. And what do you call it? And so I was like, all right, let's see if it goes into the ad zone. Let's see what happens in the ad zone. Right here, I saw that my 50 SMA was flattening out. I saw that the 50 EMA was above it. So I was like, all right, let's see if those looks can continue. Let me keep an eye on RSI. It's above the 50 right now. MACD cross. Sellers stepping out of the way. Let's see what happens. So I was like, all right, first thing I want to do is see if it retraces down to my ad zone and with these other factors. Now I'm less impulsive these days, which really helps because this thing slammed down in my ad zone, slammed down in the 50, 50 RSI. Funny thing was when you see a dramatic candle like that, it often is almost like a vertical drop to the 50, like dramatic. But this one was more mellow, but which is sort of a mixed signal. But when you also see that volume came rushing in, I was like, yeah, you know what? I'm going to stay the hell away from that. And even though TTM at this point looks like it's starting a buy wave, who knows if that is even going to last? And it didn't. Short life on buyer TTM, very short life. So I watched it chop around in here, and I was like, all right, high or low, right here. And then I was like, all right, high or low. So here it's mingling with my, what you call it, ad zone from my original fib. And I was like, all right, cool. You heard Semper talking about dojis just before. I looked to my left and I saw this guy right here, very conspicuous. What are you doing hanging out there, dude? And so I kept in mind that, and from visualizing it, I had a line drawn, by the way, at the time of this trade. I took away the line at the time of like making the recap, though. So the
Yeah, it
chart,
looks like it lines up with the 61%.
it
Pretty.
lines up, yeah, it lines up with the 61%, and it also lines up with right in here. There's another little doji, and the doji cross was right in line with that too. So when it got there, I was like, oh shit. And I noticed that we were doing higher lows. It was sort of dangling under here. I liked the way that this retrace looked as well, but I didn't like that it was coming to hit its head on the 50 again. I wanted that entry, I did, but I was like, nah, it's still under the doji, and we're under the fucking 50. And I don't want to hit my head on that thing. But up here, it sort of started tickling the top of it, you know, and then over here, it tickled it a little bit higher. And I was like, oh shit. And then I saw 50 SMA nice and flat, and like the beginnings of a fresh cross of the 50-50. It wasn't even apparent, but it was tightening up in there. So I said to myself, man, if price action lifts up above this doji, which lines up with this doji, this thing is probably going to fly. So I waited until the last second, you know, I really did. I was like, I want to see it 2 ticks above this close, this tiny doji close. So I waited 2 ticks and I was like, all right, here it goes. And then I had a fairly conservative profit. It was and it wasn't. I just had the 50 EMA in mind, and it lined up with the VWAP as well. And so I really like taking profits a couple, what you call it, ticks below a target. It's just my style. I like to play it safe that way. This is also you know, previous day low. I mean, whatever. It fucking went up further, but I felt really, really happy with it. And also when I was contemplating this doji, I saw some TTM squeeze activity, which in and of itself wasn't conclusive about direction. I felt I saw enough directional stuff to be like, yup. As soon as I see that little bit of momentum hint, I'm gonna get in. So that was that trade.
Awesome trade. I took the same trade. I just played it a little different. And this is how the way that I played it. I had that same doji that you called out over here,
The left
this
hand
little
one?
area.
Yeah.
I had a zone like all the way out to over here. And I had it zoned out. The thing right here is I always go with dojis. So this little green hammer doji right here kind of helped me
Yes.
with my entry. Because
Yeah.
my first entry was right there, one tick above that green doji.
Yep.
So I entered I was looking at the 5 minute at the time, and this is why I got in on the 1 minute. The 5 minute RSI was like down here, and it was creating actually like right here. It was creating higher lows already. And I said it in the private chat. I said 5 minute RSI is diverging. Uh the 30 minute looks a little bullish, but I forgot what maybe the RSI still looked bearish.
Yeah.
But it was the MACD was bullish or starting to look like it was basing at the bottom over here. It was like the 30 minute was like that, right? It wasn't fully crossed, but it was like basing. And the RSI in the 5 minute was diverging. So I was like, hey, 5 minutes diverging, we might have a play here setting up. I entered right here, one tick above, and then I seen this higher low again. And then at that point, it was already like right here. And the MACD looked good. It was spreading apart, not together.
Yeah.
So I re-added another 2 contracts right there.
Yeah. I love the look of that entry, but you got the further confirmation from the 5 minute.
Yep. And this is where longer time frames kind of confirm your short, your small time frame entry. And then I seen that level and I said it in the chat. This is a squeeze point. And I seen these little, see how it gets sucked up? Just like I said earlier, the volume gets sucked up. And this is gonna help you identify the squeeze levels. Is when you see two little volume bars, not even close to the average. Sorry, my son's riding his dirt bike out here in the backyard. Anyways, I seen it creeping up over here. Everything looked good. 5 minute looked good. I think at that point, I think by the time we got to this point right here, or this little level, we already had the MACD cross on the 5 minute.
Yep.
And I had said in the chat, I seen this little green bar and I was like, oh shoot, the next candle is gonna squeeze. I was like one candle a little bit early. But it just signified the squeeze right there. Boom.
Yeah.
And I got it. I locked in at the 200, no, at the 50 SMA 5 minute. I knew it was gonna be a big move because the 50 SMA was pretty far apart from all the other moving averages on the 5 minute. And it was just like that time where I called out the 666 play Lasagna Cat, and it just squeezed. I had completely forgot the data was gonna come out. But this goes to say that you can play through data.
Yep.
If all the catalysts stack up. Don't be afraid, especially if you have a cushion from a previous trade. Um, if you have a cushion from a previous play, and data's about to come out, you can either extend that 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 stop loss. So let uh and you let the play out. Don't be afraid to play through data. If you're brand new, I don't recommend it until you get used to your strategy and setup. Because you could get burned. But that being said, once you get used to it, you can play through data.
Yeah, I've seen my strategy work out through data like a bunch of times, and like, but I never played it except like once or twice that I forgot that there was data, and like it worked out. So yeah, I'm getting what's happened in the last couple of weeks is I've become, or am giving myself a little push to get more comfortable playing through the open. I did that once successfully, and I'm starting to feel a little bit more cozy about trading through data. But still working on how to protect myself and stuff. So all good. And this is my second play from the day today. And in a sense, I love this play. I mean, not only because it worked out and because it continued really well. But I mean, it's just cool. But there was a few things about the play that I wasn't feeling that great about, but I allowed myself to step outside of my rules a little bit. But I'll tell you why I really wanted to get in the play. Number one, it had gotten so much strength. You know, it looks strong with all these higher lows and a huge push from data, and often these data pushes, result in continuation. What I didn't like about the play, when it came up here, I drew my fib down to the very low, top to bottom, and identified my ad zone and created this ad zone here. And so, in typical form, I was like, all right, let's see if it can make its way down to the ad zone, gradually, hopefully. And, see if there might be a leg entry down there or see what happens. So on its way down, it looked all right. Then it made this huge red candle. I can't remember how fast it was, but it looked like this. It was a big red candle. And I looked at RSI to see if it slammed down kind of vertically to it, which implies even more strength to the downside and possible continuation.
Yep.
I thought that this angle didn't look so bad. I didn't think it looked awesome, but I thought for a candle this heavy looking, it didn't look so bad. It put in a volume beat as well, which I wasn't crazy about. But what I did like was that it was an ad zone coinciding with the 100 EMA, and that my my moving averages were stacked nicely, and that my 50-50 cross looked good. Looking back, I see we also have the 10/50 cross, so that's cool. I'm now starting to identify that thanks to today's talk.
You have do we have the golden cross too or no?
No, the 50 is still under the 100.
Okay.
Um,
That cross is over here on the right.
yeah, right here.
Yep.
Yeah. So the only thing that really made me apprehensive about this setup was that, MACD didn't look great. And this looked a little bit heavy to me, not as bad as it could look. TTM looked good. Like, sure, it looked like buyers are stepping out of the way, but this is very small seller and smaller than the previous. And the previous is nothing like this. It's much bigger. Whiplash, have to run. All right, cool. Thanks, Whiplash. See you soon. So, you know, I saw print is tiny. What I liked about this, right? So there's this big red, but the fact that this is a tiny doji right here gave me a lot of reason to think that if it pushed up, it would be a good candle to enter on. And here's why. Is that dojis are decision candles. That's one way of looking at it. It can imply a decision. So if you get in above a close, you know, it has a good chance of continuation in that direction. The other thing that I liked about it, and the other thing that I like about having a small candle in this situation is that you set your stop. It's a very small stop because it's a small candle. So I saw that I could protect myself. The other thing that happened was the ideal entry would have been here, like one, maybe two ticks above the candle close, the body close. But I wanted to wait a little bit longer just so I could prove to myself that this heavy candle was less likely to work out more to the downside. That might have been a little bit, in the future, that might be a little bit more caution than necessary. But I thought for today and for my level, experience level, whatever, and progress level, that was a good way to do it. It added a little bit more risk to the tiny candle, you know, technically, but I just felt better about seeing that momentum. And my profits were dictated by the fact that it was by these closes up here and my 100 fib, and that was good enough for me today. And that netted like a cool, cool trade, 6 points, maybe 625. So awesome.
Yeah, awesome trade. Like you said, the thing that stood out to me is that big red candle, and it didn't break through the 50 RSI. If it would have broke through the 50 RSI, I would have been a little bit more cautious, but the strength was there. You had the 1050 cross. That signifies that there's going to be another leg up.
Yeah. And I didn't have that in mind for today, because Connor and Brandon and a lot of people and you, like, there's plenty of people in the room who talk about the 1050, but I straight up have not been paying attention to it. And it's like the cornerstone, or one of the cornerstones of a lot of the things that we look at. So after today's talk and the fact that it played out in this example, I'm gonna be paying much closer to attention to that.
Yeah, I started paying a little bit more closer attention a few months back when Connor was emphasizing the crosses, and it signifies strength, for continuation.
Yeah.
So definitely pay attention to it. Just to, like, okay, you got the cross. It has strength at least for one more leg up.
Yeah. Yeah, I'll keep that in mind, because it's like those indications for continuation are kind of like what I was alluding to before, which is, how does a trend that how does a counter trend trade turn into like one of the big ones? Because pre-market was all downtrend, if I remember correctly.
Yep.
Yeah, awesome.
Cool.
I think I could do maybe one more. Getting a little winded here.
If you want, it'll be the last one for sure.
All right. Well, the reason why I want to do this last one is because it's another green. But it's not just any green. It's a green that sort of confirms that there's another way that I can play my setup. Let me just find this one right here. And yeah, I actually got 2 scalps out of it. It's awesome, and it's like a new aspect to my setup that I had an inkling about. And Semper, you and I had a conversation about it, I think, last week. And here's it playing out, and I have a couple little examples of it otherwise. So what it is like, so here's my setup, right? Like higher low, get in an entry, here's another higher low, and then boom, right? Up to your SMA 200 or your fib target. If I had drawn my fib here, I probably would have caught a 161 up there or something, theoretically. Here's why I didn't play this setup, is because I was just straight up late to the game. I was out doing something, or or what was it? Oh no, wait, this happened in pre-market. And so I'm not really around for pre-market until like 8:30. This move starts setting up here. I probably sat down on my computer here. I was like, oh shit, look at that. You know, and then whatever. But then the open happens. Oh no, it wasn't even the open yet. It was still pre-market. And here's what I noticed recently is that when my setup, which is this higher low thing that's often a reversal just after a big dump, whatever, two higher lows, when it comes up to a major moving average and you draw a fib from the top of that major moving average down to the bottom, and sometimes it works even with a lower fib, but the major moving average is a big point, it will come back down to the ad zone. Like to me, like you see how it goes up after here, like here it goes up to here. To me, though, I was looking at it along like for a long time was like, all right, that's an ad zone here because of the higher lows, right? But then after it completes that move, then I thought that this as a buyer zone was no longer applicable. But I'm noticing recently that if it hits a major moving average, comes back down, there's a pretty good chance that that buy zone will again be applicable for a pretty decent move. And I've noticed that the move to get back down to it is often choppy, kind of funny looking, like this is boring, this sucks, like what, there's nothing to do, there's nothing to see. Um, that type of thought. I don't know, maybe that maybe that narration doesn't completely apply, but you get it. Like it's like, kind of a nothing zone.
Well, that right there is like the sellers trying to take over, but they
Right.
couldn't because look, it's red, green, red, green, red, green, all the way down. It feels like red, red, red,
Yeah.
and then green, and then red, 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 and might have continue going down. Like look at over here. There's more red and bigger reds than green. Over here, they're kind of the same size. They're chopping, which is right here, compared to right here.
Oh, okay. Yeah.
Uh, that's where you're like, okay, they're small, and then look at they're small red, big green.
Yeah.
Couple of small red, big green, and they're in the battle. But that zone has that right there, has that right there. So you got buyers right here and
I
buyers over here.
and identified the doji zone because there's the
Yep.
doji, and there's that little guy
Yep.
right there.
So
Yeah.
that right there, buyers are there. This
For
is probably
sure.
buyers taking profit, so it causes it sell off to
Yeah.
where it's caused more people buyers to get back in.
So it was like, so there are buyers taking profits. This is buyers' second opportunity.
Yep.
Came down again, buyers' third opportunity.
Yep. Especially if you see like big squeeze point, like say this green candle right here was right here instead, right? Like right here. That's definitely a squeeze point or a buyer zone. Let's
This,
just, for example, yeah, if that one was down here,
oh yeah, yeah.
that's what you want to kind of try to see because even up here, you got big red. So you know this is going to happen. And then if you go all the way out to right here, look at it confirms that level right there for
Yeah.
that move.
And the
So
first thing that you were alluding to with these being up and down candles, swapping red, green, red, green, red, green, versus this, these
Yep.
are actual red legs.
Yep.
Yeah.
Yep.
That's awesome. I don't know, it worked out really clean. I identified it was, the ad zone plus my awareness of these dojis back here. So I decided to make it an official leg entry, not just buy down there. I was like, all right, let me
Yeah.
do this. Let me do this the clean way. So this was the low candle. I ignored that candle and that candle because this one is the first one that actually got above the low candle.
Yep.
So I did that, felt good about it. A little thing. I noticed a lot of time it pulls back to that leg entry. It's a really interesting thing.
Yeah, but
And
it won't even get near your stop most of the time.
exactly. It'll come back to your entry kind of a lot of times, but it like won't go below it. It's funny, maybe a tick or two.
It's because you're catching the momentum. Remember, you went from catching knives to catching the momentum.
Yeah, for sure. So I played this, similar to other profit takes, a couple ticks below the 200 estimate. It did this stuff, didn't intrigue me at all. But then I was like, wait a sec, if it does a pullback, because I saw that we were above the 50 RSI. I was like, man, that's a nice distance for a pullback. So like it pulled back down here. I was like, oh shit, 50 SMA lining up with 50 RSI. I know what that means. This volume here, I straight up didn't care because I figured I could get another good pop. So what's this? So again, leg entry. This was the low candle. This was a couple ticks above. And nice squeeze. I don't know. I was looking at the tops. I was probably meaning to take it out here, but I didn't have a sell order. So, it squeezed, I got it a couple ticks above. I just wanted that scalp. I wanted, it was, I think literally 2 points, maybe 2.25. I wanted it because I wanted the setup and I saw that the setup was there. And like, yeah, it could have gone higher, but I just really wanted to get it back at the tops, And that was that.
Is this your, what's this line right here? This fuchsia? Is that
200 SMA is the solid. Yeah.
See how on your first play, the 50 was really pointing down? And then right here, you see how, this is what I like to see, all the moving averages kind of swooping in.
Yeah, yeah.
But look, the 200 still pointing down the whole time.
Right. So
instead of flattening out like the other ones.
Right.
So that says that the 200 is a heavy resistance. When Brandon or Connor says this moving average is heavy, that means that it's still pointing down.
Yeah. Yeah.
Because look, whatever that moving average is, and then this moving average is, they're already going up.
Yeah.
With this right here crossing right here, this should be flat right here.
Right.
But it isn't.
Yeah.
That should be like, okay, that's going to be the resistance point. So it might break through and then come back down.
Yeah.
If it was flat like this, then you're hoping, if it was flat like this, you're hoping for price action to come up, hold it, and squeeze up to the 666.
And so the fact that the 200s are crossed to the upside here doesn't matter really because the 200 SMA is pointing down still.
Yep. Remember, the SMAs have to be flat.
Right.
Is a 50, this 200 EMA is flat, but it should have flattened it out right here.
Yeah.
Because it's above it, so it's pulling the 200 SMA up.
Yeah.
And it didn't. It's still pointing down.
And it's
so that should make you a little bit cautious. Okay, it might still have room down.
Yeah, which turns this into a riskier, or like a fairly risky. Yeah. All right. Good to know. This was definitely unconventional for me, but it was that, I took a shot at the 50-50 and it worked out.
That lined up, and you had that scalper mentality.
Sure. Yeah.
Because it's still not in the uptrend yet.
Yeah.
Even though you have this right here, this would have needed to go up here, and then this, and then you're kind of in a trend reversal, trend change.
But yeah, or trend change.
Yeah.
But instead, it actually confirmed underneath it and went down.
Yep.
Yeah. Cool.
Cool.
The reason why I wanted to. Do you have any more comments on?
No, I'm good.
Okay. One of the reasons why I wanted to share that one is that there's been other examples of it recently. I'll show that one last, but I just wanted to get these other examples just to show you guys what I mean when I'm saying that it's like a new aspect of that. All right, yeah. So here we go. Same kind of deal. It hit a major moving average. The 100 and the 50 were kind of teamed up. And then, it hit the higher low, went up, and then it was just been chopping around, and it came back down to this zone for continuation up. And it's the same kind of look where it just chops around like this fib area, and it's red, green, red, green, red, green, and it comes down. And what was happening back here, I think, Semper, this is the trade that you and I talked about. And this is one that I didn't take. This is one that I just noticed the price action because it was familiar. Or maybe I did take it. Actually, you know what? I think it was one that I took this entry and it kind of flopped around and like I like took like 2 points and something. It was actually a sloppy trade, but we talked about how this shit sometimes turns into this, a fresh low break and up. And what you pointed out was this. So it's, you look for the implied buyer area, not even implied, you look for the existence of a buyer area where this does the low break.
And that's the example that I was saying. When you see this big green candle,
Yeah.
especially with the hammer like this, you know buyers are there. Look at that long wick.
Yeah.
You know buyers are here.
Yeah.
That's going to be a strong level. So mark that level out as support or what is that? Demand zone,
Yeah.
supply zone.
Yep.
Yeah.
All right, cool. So that's another one. And just to show you, I got one more. I mean, there have been others, but so this is another one, I think, from July 27th. Is that last week? So, I mean, here's the trade that I took, really nice second leg entry dirt up to 666. And so here's where you would have drawn your fib or whatever. Major moving average, 666, and also the what you call them, the 100. And then this one chopped around a lot. It chopped around a lot. And the price action is a little bit different going down because it's a little more violent red and a little more choppy. This one's maybe not the best example, but what it does have is the same as the other ones, is there's a nice doji here, really nice doji, which lines up with like these wicks. Probably lines up with the tail of this doji, actually. And these wicks here. So we have identification of buyers. Also, this volume implies some very big buyer activity. But it's just I'm gathering these examples of how I can play my system differently, or when I feel like I've gotten the most out of it here, I can look for another occurrence of it here, in this area. So
Yeah.
it's a pattern I've been looking for, and I'll probably be playing it.
Nice. Remember, look at squeeze point.
Yeah.
Also, this doji, this hammer doji.
Yep.
Squeeze point. So you mark off that doji, and then you see it. Look at the volume on this red green bar. This little green bar should have went up like at least like that much, and it didn't.
Yeah.
So they're priming it.
Yeah.
They're priming it to get sucked up on the next couple of bars.
So when there's lots of buyers, is that called supply zone, or is that called demand zone?
I would say demand.
So this is like the beginnings of me like putting together an ad zone strategy, or a buyer zone strategy.
Yep.
All right.
And you'll transition to price action instead of just moving average. But like I said, you already locked in the moving average play, that stuff, right? Even though you're still getting caught, you're already got that foundation and fundamentals locked in.
Yeah.
So you can add another strategy that'll help you identify something different that moving average can't.
And so, and just to go back to another thing we were talking about. So this has a very strange moving average look, but I took the trade anyway. This is from a couple weeks ago, but just as long as it's up, I'll ask. I saw the pullbacks and I thought it looked good. So I took it and it worked out. And I noticed that the 600 here is like pointing up, but these other moving averages are pointing down. Now, is this a trade that you would have taken? What do you think of this moving average look? Because it's not typically what we look for, and it's a pointing down one. And it worked out well enough. And I was wondering if the 666 might play into it, or this might just be something that luckily worked out. This might have just been a lucky one.
Yeah, but see how the last other plays, this was like steep, or at least steeper up here.
Yeah. Yes.
And it kind of starts, and this goes to say that sometimes screenshots don't help, because this moving average could have went down and then pointed up and then flat. So those are things that you need to start identifying. But the 50R size there, lining up with over here.
Yeah, totally.
So you totally could have played that to, what's that yellow line, 666?
Yep.
And this is a 200, right, up here?
Yeah, 200 EMA, 200 SMA. Yeah, yeah.
Yeah, and these plays, this is where, oh, this is a perfect play. Remember I said that price action goes up at bases, right? At bases, price
Mhm.
action goes up, and then it hits that base again. And then look at that doji right there.
True.
Again,
Oh, yeah, yeah.
that doji,
The lessons repeat themselves.
the doji right there.
Yep. That's cool, man.
Mark that sucker off. And this is exact same play that I was kind of talking about previous, where I kind of had to draw it out, where
Oh, shit.
it based, look at the Bollinger Band, it based.
Right.
Um, and when you see the Bollinger Bands pointing into each other, you know something big is setting up.
Yeah.
The odds of this play, I probably would have played it either here or here, just because it's a good base, held
Mhm.
that doji. After that doji, created a higher low off the 10 SMA right here, right? So that's a good one to go up to the 50 right here.
Yeah.
And then you probably could have caught this one or just played this whole play out, let it play out. But when it's in a downtrend, which it looks like it might have been in a downtrend, especially the way it was coming off.
You know what I see over here? All right, I see the 50 SMA start planing out flat. I
Yep.
see the 100 starting to do it too. And I see the thing you were talking about in that last slide about this was basing here and then higher low on the 10 and then higher low on the 50.
Yep.
And I don't know how high up again, but even just like right there, that's a good scalp right
Yeah,
there.
but look at the moving average. The 100 is starting to flat out.
Yeah, exactly.
Remember on the previous one, it was pointing down,
Yeah.
even though the 50 SMA was flattening out.
Yep.
This is the kind of stuff you want to see, all of them flattening out. But obviously the faster ones are gonna flatten out before.
Yeah.
But look, it's perfect.
Yeah.
Flat, started pointing up, and then obviously the 10 SMA is flat. And that's what you want to see. When you
Yep.
start to see them flat, then you know that it's probably going to have strength to go above that moving average.
Yeah.
And this play could have easily gone all the way up to the 200 right here
Yep.
and reject, because the 200 is closing in on the 666 right here.
Yeah. Yeah.
So I'm not saying it happened, but it could have been where it could have been where the 666 was right here. Price action went all the way right here. Now what you would wanted to see is a higher low off of here in continuation. But most 100 is this close to the 666. Price action is gonna go right here, pull the 200 down here somewhere, and then it's gonna cause a cross. And either the cross, there's two possibilities when the 200 crosses the 666. Either it's gonna have a good squeeze up right here. I can't kind of draw it. Let's just say it's right here. It's gonna push it up, and then it's not gonna cross, or it's gonna push back up to the 666 and continue going down.
Yep.
Those are the two scenarios. Yeah.
Oh,
Good play.
excellent.
I probably would have played one of them. Like I
Yeah.
said, either the first leg or the second leg. The second leg is a little bit cleaner,
Yeah.
and you played it up to a moving average or whatever. So you even played it up to these dojis.
Yeah. Yeah, totally.
So you, especially with this right here,
Mhm.
says there's sellers in that area, and look, you could tell
Yeah.
right here.
Yeah.
Remember, a small little candle and then a big one. Mark those levels off. Even dojis are even better.
Yeah.
Because yeah, look, you got that doji straight across,
Yep.
squeeze point,
Yeah.
and then you get the little pop right there. Boom. But yeah, awesome,
Cool.
awesome.
Thank you.
It's a long class today, but thanks everybody for coming. Thanks everybody for stopping by. And if you're not with easy, then let's continue going. Let's follow along. For easy, we already know what to do. Read the Trading in the Zone psychology book, write down some lessons, start practicing the strategy we kind of helped you identify. And then next week, we're going to tighten it up a little bit more, and we're going to start jumping into some rules that you can create around your strategy and help you narrate even better. So thanks for sharing. Thanks for participating. And we'll see you guys next week. Thanks, everybody. Have a great weekend.